Good morning, traders. It is Thursday, the 20th of October, 2016. Thanks for joining me. It's 8:01 a.m. Chicago time, 9:01 Eastern. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. As you probably already know, the overnight session was really anticipating the movement on the ECB announcement at 7:45 Eastern, followed by the press conference, which just came to an end by the ECB president. And there's been a fair amount of movement in the euro and euro-based products like the Bund and so on. The general stance of the market currently, there is a risk aversion stance right now to how funds are being allocated. Funds are being allocated out of risk. Crude oil is the weakest commodity that I'm watching this morning at down 79 cents, trading at $51, down 1.5%, followed by the Japanese yen, the British pound, and then the indices, the U.S. indices, and then the European indices. The Nasdaq's actually teetering on flat. It's only down 2.25 points from yesterday. And then the strongest product, of course, is, as we would expect, is gold. Gold's up only 12 basis points, up only 12 basis points, $1.50. So, despite this ECB announcement, the market really isn't displacing itself too much. As far as what we are expecting going forward, this morning we're looking for existing home sales at 10 Eastern. This is a prelim number, expecting 5.35. Leading index also at the same time at 10 a.m. Expecting 0.2. We get natural gas at 10:30 Eastern. And then as far as speakers, we have finished with the speakers for today with Draghi completing this conference. And then we have earnings from Microsoft after the close. Okay. So that's what we've got so far. As far as what we expected yesterday, let's take a look at how the market performed versus what we expected. This is from yesterday's Trader Bite. Okay. This is from yesterday's Trader Bite. The primary idea, given the stance of the market at the time, is for the market to open in an open auction. We were opening yesterday around inside of the value area, inside of range, just above the point of control. And the primary idea is we start with a sideways market. There's nothing new to price in. I expected a dip down towards the point of control of the prior day at 21.33, and then I expected buyers to push us out of the prior day's range. The prior day's range high is at 39 and a quarter, and still looking for this target from quite some time back at 21.44.50. That was the primary target on Hypo 1. Hypo 2, uh, to basically open up sideways, just as in Hypo 1, and then attempt to push higher and through the prior day's high. We did have a weak high on the overnight, and then to find sellers and fall right back in and trade through the range and potentially push to the other side, push all the way down to 21.29 or so. The idea that worked out yesterday, the primary idea that worked out yesterday, and it happened on very very little movement. You can see the two-tick Renko chart did not print that many bars. I don't need to compress it much to show you the entire day. And what you have here is almost a spitting image of what I drew as far as chop on the open auction, drop into the prior day's point of control, then find buyers, push out of the range, and then continue higher, except it got to 42.50. Got to 42.50, did not quite get to the 44.50. I'm going to overlay my trader bite on it here, and you could see that it's the same thing, right? Chop, drop towards the point of control, push through, pull back, and then continue higher. Uh, and there it is, chop, drop towards the point of control, push through the point of control, initial push out of the range, pull back, push higher, and then the higher push did not get there. Okay, and so some of the features we want to notice from yesterday, we have a P-shaped profile with the bulk of the volume occurring above the IB. We pushed through to above the prior day's range, and we have our point of control not near the high, but on the higher end, with a fair amount of action below the IB. But most of the afternoon was spent on the high, so the expectation on this is to continue higher, and the overnight high is right up here, and that's what we got. As far as what we're expecting for today, a quick look around. This is the Bund. This is the German 10-year product. It's on a 60-minute. Let's switch it. Here's the Bund's reaction to the ECB announcement. Okay, this is one of the primary products to interact with any ECB news. And you can see it's just whipped around. It's back to the scene of the crime. It's back to where it started from, and it's resuming its normal auction. It's stuck in this high volume node. It's got a gap zone below it. And we know that because thanks to someone who volunteers to put up these flex levels for this product, it's appreciated. But overall, the Bund hasn't gone anywhere for a period of time. So here's the drop, and then it's just sitting. It's been sitting sideways for some time now, for pretty much since the beginning of the month. The euro, on the other hand, has been trading like someone said, like a penny stock. The announcement comes in at this bar here, and then we have the ECB conference, and it just has this massive range. It actually tested this HVN almost to the tick and has fallen back off. And then where is it now? It's below the scene of the crime. It's below where it started from, and it's starting to push lower. It's essentially got a an excess high at this point, or an unfair high, and is pushing in the other direction. So it's pushed below the $1.10 handle again after getting above it for a brief period of time. The euro's seen just consistent selling. If you look at this trend in the euro, it's just getting weaker and weaker. So I think it's on par with I think it was the pound or something in some locations. So that's unprecedented. As far as what we're expecting for today, one of the things I'd like to show you is if you keep an eye on this profile right here. So keep an eye on this, okay, where the point of control is. And I'm going to shift this back to where it was, and you could see from based on yesterday's action, we're filling in below on this profile. This profile is from 9/9, from the September 9th drop into this area. And the point of control and the target that we've had all along is right up here, this black line. I know there are a lot of lines and it looks messy and confusing. It's just because it's compressed. But this black line has been the point of control all along, and it's at 53.50. And that's been the target above. If we get above 21.44, that's the 21.44.50. That was our target yesterday. If we get above the 21.44.50, which is, by the way, the overnight high, so we couldn't make it yesterday. We got to 42.50, and then we pushed to 44.50 on the dot overnight. We pushed to this area, and then a push through the 44.50 would have us climbing the next hump, and the point of control is at the top of this hump, and that's been our target. So as we watch this point of control line, this black line, Going forward, we notice a shift from yesterday. So I'm going to shift it forward, and you can see the volume filling in a little bit below the center. And then eventually what happens here, we end up with a shift down. There's the shift. There it is. Okay. And so the point of control shifted down, value shifted down. And what this is saying is essentially that the market is accepting these, has traded so much at these prices, it's accepting these prices. What is the price? 41.50, 41.50, and that's where we're stuck. As you know, that's where we're stuck. Yesterday, we ended up trading a lot at 41.50, and therefore shifting the point of control, the microcomposite point of control down, and what this is essentially signifying is that sellers are fairly active at these prices. When it gets to 40 or above, we've seen sellers step in uh, every time. You know, we saw them back here, we saw them here, here, and so on. There's a lot going on here that to the point that it's shifted the point of control down. In the short term, the latest balance, which is this profile, we have the point of control down at right where we are now at 35 and a quarter. What is this? What does this all mean anyway? I'm confusing you. What it means is that the market is completely balanced as of right now. There's nothing, the expectation is that it would move around based on the ECB, and it has not been affected. It is basically consolidating, and it's completely imbalanced. So when you come in today to trade, you need to be aware of where we are against not only the prior day and the day before that, where we're trading versus that value, where the auction's proceeding, but where is it proceeding against this entire area? And what it's saying is the expectation this morning is for a choppy open. Let me show you the overnight first, though, to help solidify that plan. So here we have the market reopen. It pushed to 44.50, and then it has drifted down with an impulse push down on the ECB. The impulse push had a fair amount of volume on it. So when you look at the order flow, that happened on the announcement, you could see that there's a fair amount of movement. Of course, volume is not that high. This is set to a higher threshold, but there's a fair amount of movement, and there's just a good amount of selling coming in here, and it has sat sideways. By the way, see this gap here in the bid offer, this black area? That's right before the ECB announcement right here at 6:45. You can see how the algos, when you're tracking, you can track algos here, and you can see the algos basically getting turned off right before, and that means the spread is getting wider and thinner right before the announcement, and then again right here, right before the conference, and this gives you a visual of what is actually going on, you know, before news hits. Anyway, so right now we're in a position where we are up against the most recent MC point of control. We're below the bigger MC point of control. The point of control from yesterday is higher, where we're basically trading inside of this the last 3 days. The expectation this morning is chop. I expect it to find a responsive buyer, but overall I'm looking for it to start shifting down. The overnight low is likely to break. I'm looking for a pullback and then potentially a drift down to this ledge down here at 21.25. Okay, so that's hypo 1. If we get some range, that's about 10 points, 10, 12 points of range, well within daily statistics on the sell side. That's hypo 1. Hypo 2, I'm looking for chop, test lower, and then come back in and then essentially trade around this point of control for the rest of the session. I'm not expecting too much today. Unless there's news that comes out, there's really not a huge expectation that movement will ensue. Hypo 3 is the basically following the trend of the point of control shifting up. Hypo 3 is a test lower, and then a push up, a pullback, and then finally the continuation to 44.50. That would be hypo 3. It's a fairly low probability given the context that we're in today. That's what I have for you for today. Uh, Again, trade your own plan. The idea is to take these hypos and then look for what the market will do before engaging with it. If you want a better explanation of how these hypos can be turned into trades, the webinar I did for Futures IO on Tuesday, which was posted yesterday, explains that in a fair amount of detail. It takes you from coming in, creating a plan, to actually executing on it, and what I'm looking at and what I'm doing to execute that plan. I'll retweet that webinar this morning. Please hit the like button before you head out the door here. Stage 5 traders, we have our webinar at 12 o'clock. The invitations will be on their way in the next hour or so. Thank you.